Thank
for
you.
having us.
So first of all, I would like to start with you, Win, and ask you why, if needed, China has to strengthen its currency.
Well, I think it's in China's interest to eventually strengthen the currency. Now, that was on a path of strengthening from July 2005 when they depegged from the dollar up through about July of 2008. And when the crisis hit China, they basically put everything on hold. They eased monetary policy, put exchange rate policy back on a peg, an unofficial peg, and they've been waiting now for their economy to sort of make its way through this crisis. So it's been on sort of the back burner for the last several quarters, but as you probably know from the media, the U.S. has been ratcheting up the pressure on China the last several weeks.
So, for example, we have heard this week Obama saying that yuan is undervalued. After that meeting with Hu Jintao, there wasn't a timetable set. When this strength in China's currency will happen, if it's going to happen in the near future?
Well, you probably know that the U.S. Treasury was set to issue a currency manipulation report. And it was widely speculated that China might have been on that. But I think cooler heads prevail. It's an election year in the U.S., so it's very tricky. We know a lot of people in Congress are complaining about China. They're using China as a scapegoat. And it's very tough. But for now, the administration, the Obama administration, is being very sensible. I think it's good that they're sort of stepping back from a very confrontational approach. The fact that this report was delayed, I think there's some sort of backroom dealing that's in the works. We have some several high-level meetings in May and June. So I think some deal will be worked out, and I do think the currency policy may shift somewhere around mid-year.
And you, Alan, what's your perception on the floor about all these issues, about all these not timetable happening with the yuan?
Well, you know, I agree with Win. Most of us think it's going to be mid-year to the end of the year before you see any real movement out of China. But, you know, we also think it's going to help the domestic consumption. Right now they're so focused on exporting, but the domestic consumption we think will be greatly enhanced once they revalue.
I was reading actually this week an IMF report that says like excess of liquidity could lead into bubbles, and there's much more said about a real estate bubble in China. How is this could be related to the yuan, to the?
Well, that's one of the things. They've been running easy monetary policy in China, and the property sector has been getting a bit bubbly. They've been using sort of moral suasion, some arm twisting, some sectoral credit controls on the banking sector to try and cool down that property sector. But to me, China is growing. I think right now the expectation is 12% in Q1. I think the bottom line is that a strong, growing Chinese economy is good for the global economy. China is pulling up the rest of Asia. It's helping Chile, Peru, and some of the other commodity exporters. So to me, I think it's wrong for the U.S. to sort of point at the bad things that China is doing and really recognize the fact that China has been a really strong anchor throughout this whole credit crisis. And I think and that's something that they realize.
Yeah, what do you think about it?
Yeah, I agree, Guan. First of all, as far as the housing bubble go, unlike the United States, Chinese have to put down 30% to get a house. So even if there is a bubble, it's not going to be as extreme as here in the United States. And also, for a lot of it, it's more like protectionism that the United States is trying to force upon China, our own protectionism, and that's never worked in the past.
Remember all that stuff they did with Japan back in the 80s? And
exactly.
No matter what the Japanese did, there was always complaints from the automakers.
Exactly,
sectors.
exactly, yeah. And it just doesn't work.
And I was reading that some people point that if this strengthening of the currency doesn't happen in the second quarter, there's not going to be another opportunity. And you guys are telling me that maybe it's going to be at the end of the year. How do you?
Oh, I think really it's a political decision on the choice on the part of the Chinese. I mean, they can go any time. I think the reason they're not doing it now is because it looks like they're caving into outside pressure. The Chinese are always pride themselves on not giving into outside pressure from the U.S. and even the Europeans. And so I think that any move now would sort of give that implication. So I think they stand tough. They're probably behind the scene. They'll promise something to Geithner and Obama, we see a move. But the one thing I would say that there's a lot of guesswork right now, and really it is guesswork. But my feeling is that the market has pretty much accepted that it's going to happen, whether it's May, June, July. Big picture really isn't going to be a big impact, maybe except for the speculators. But for the big global economy picture, I think. As long as they move, it's sort of, everyone's okay with that.
I agree, and I think you saw today in Taiwan, they revalued. So I think you're starting to see that they're revaluing probably in regards to what's going to happen in China.
That was Singapore, right?
Singapore,
right.
Rather, Singapore.
And
yes.
actually, Alan, I want to ask you, we are seeing a lot of U.S. companies having a lot of interest, aside from Google that quit the market. How is this, how do you think these companies are gonna accept this strengthening in yuan?
Well, I think they'll accept it because, China is such a big partner to us. I mean, you look at these companies, even Google, I mean, it's a surprise move, Google, but I mean, I think it's more than just the yuan. But I think companies like McDonald's, if you look at today, if you look at, say, Intel, Intel cited Japan, Europe, and Asia as their growth, not the United States. So these companies know where the future lies right now, and I think they're already prepared for it.
Yeah, it's surprising seeing, for example, General Motors, that it's actually growing there in China,
yes.
while here in the U.S. it's still...
I mean, it's right across the board. You look at McDonald's, from McDonald's to IBM to Intel today, it's right across the board. All the growth is coming out of Asia.
So,
I agree.
I want to... What do you think about how Obama's administration is handling this issue right now?
The China issue.
The China issue.
Well, again, it's kind of being tried to be swayed by the I think by the Senate and Congress that are up for a re-election in the fall. So it's really the political situation, the calendar is really injecting a bit of sort of maybe hysteria into it. I think this is something that it's not just an Obama issue. I mean, Bush, previous administrations have been wrestling with this.
Meetings,
yeah,
we're always asking for that, and never happened.
That's right.
And do you really think that Geithner is going to include China as a manipulator of?
I don't. I do think that the fact that they're stepping back, delaying the report, I do think that they're going to step back. I think the big sort of the gorilla in the room is that the fact that China is the biggest holder of treasuries. It's something around $875 billion of U.S. treasuries, more agency paper, stuff like that. So it's not a one-way relationship. We need China. China needs us. I think it's a very to me a symbiotic relationship. And it's something we can't just sort of hit them over the head and bully them. I think we need to work together. And I think that'll happen. We have a strategic economic dialogue meeting in June. There's a G20 meeting in May. So there's a lot of room for cooperation. And again, I think the Obama administration it seems to me, has sensibly stepped back from this sort of heated rhetoric. And I think it's not good, that sort of stuff.
Right. So I think you'll see it fade away, the rhetoric that is, because like one says, it is an election year. I mean, they're trying to do some phase, but at the same time, they're not going to offend the guys that hold them.
You can really throw a monkey wrench into the markets, yeah.
So I'm wondering, because my colleague there in Beijing that did the first part of this show was expecting that here in the U.S. we were going to have a complete different view on China relation, and it seems that it's not happening. It's not that way. That mostly, as you guys are saying, there is a political game that it's trying to portray China as the bad influence here, but there's really a need of China for the U.S. to grow, for the global economy to grow.
Oh, there's no question about it. And like Ben says, it's a global economy, and they're a big part of it, so we're not going to rock the boat too much. I mean, we'll say a lot of things in an election year, but when push comes to shove, we'll back away. And like you said, April 15th, tomorrow, they were going to name China as manipulator, and Geithner's backed away from that, so that's not going to happen.
And let's put in the situation that this strength in the currency happen. What's going to be next? What's going to happen?
Well, we're seeing a generalized appreciating trend in not just in Asia, but in most emerging markets: Brazil, Mexico, Turkey, and of course currencies in Asia, Singapore, Malaysia. They've all been strengthening. Right now, we have very low interest rates, very slow growth, with the U.S. exception in the developed world. And investors in general are going to chase the return. They're going to chase the yields. They'll chase the growth. China's growing 12%. That's probably a good place. Singapore, I have to make sure I repeat this correctly, they grew 32% quarter over quarter annualized. 32%. I thought it was a typo. In Q1. So the growth is there. And again, China's part of it, but a lot of these emerging markets are doing quite nicely. We need the U.S., we need the Eurozone to bounce back, but for now, the emerging markets are a really good story. So I expect China's sort of a symptom. The currencies, the money is flowing into these countries. Those currencies are going to strengthen. China's been resisting that, but eventually it will give in. They'll control the pace. We did some studies that after the 2005 revaluation, most of the Asian currencies also strengthened after China repegged at a stronger rate. So we would expect the appreciating trend to continue.